Chanda Kochhar as well, Managing Director and CEO of ICICI Bank, a big corporate voice joining us live and exclusive on ET. Now, Ms. Kochhar, thanks for joining us here on the channel. Your initial reaction to the budget, would you call this a pro-growth budget in the backdrop of the massive demonetization exercise? Does it tick all the boxes? Do you think it's a bold enough budget given the circumstances that we are in?
Yes, I think it is indeed a pro-growth budget with so much of allocation of public funds towards investment. And not just that, I would say that it's pro-growth and at the same time has maintained fiscal discipline in that sense directionally. So I think it ticks all the boxes of focus on, investment, on rural, on digital, on youth, on skill development, and at the same time maintaining the direction of fiscal discipline.
Steps taken as far as the banking sector is concerned. We've seen a whole host of steps taken there, even though the bank recapitalization amount for PSU banks hasn't been increased from what was committed of 10,000 crore rupees. But several steps taken for the banking sector. How do you read the budget in light of the steps taken for the banking sector? Ms. Kochhar.
Yes, I think, if you look at it, first of all, the payments regulator within RBI, I think that is going to streamline the whole payments value chain substantially. As far as the capital allocation to public sector banks is concerned, while the amount mentioned is 10,000, but the finance minister, I heard him say in the speech that view can be taken if more is required. Then additionally, a whole focus on resolution and, the entire legal system or legal ecosystem to enable resolution. I think that also is a very, very good and positive impact.
Banks have been, laboring under the huge provisions that they have to make for non-performing assets. But at a time when NPAs are increasing and provision requirements are also increasing, the finance minister has given them a helping hand. He's increased the tax reduction for these provisions from 7.5 to 7.8. How much will that improve the financial position of banks? And will it significantly improve their bottom lines? Chanda?
Yes, so in fact, I was saying earlier that I lost the connection when we were talking about the impact on banking industry, and I was going to add a few more of these points. Indeed, what happens currently is that, while the banks make provisions for non-performing assets, there's a limit up to which they can charge it for their tax purposes unless they fully write off those provisions or that account. So that percentage which is now going to be allowed for tax deduction has been increased, and that definitely was a much required thing. We had all kind of made a request and demand for that. So that's a positive thing which will actually, increase the net profit after tax in that sense, because it will reduce the tax burden, make some more provisions allowable for tax. The second thing is that just for the banking industry, I think the entire digital push, that itself is a positive again for the banking industry. The one more factor that is positive is this entire focus towards affordable housing. And I think that in a way creates a huge amount of multiplier effect, but also positively impacts the whole, lending push towards housing. And then finally, of course, the entire infrastructure spends and the allocation for infrastructure spends.
Ms. Kochhar, this is Supriya Shrinate from the Mumbai studios as well. Do you believe this budget has created enough space for the RBI to move into a lower interest rate regime domain?
Well, interest rates depend not just on the budget, they depend on various other macroeconomic indicators. But I would just say that one thing about inflation, that, they've actually delinked vegetables from that APMC, and I think that will enable the markets to find the right prices for vegetables, and that can actually work quite positively sometimes, on the right price being found. But interest rates actually, as I said, depend on many other things. And we as banks always look at the deposit and the lending interest rates, which depend on many things, including cost of funds and cost of deposits.
I have a quick question coming your way, Ms. Kochhar. What is your overall rating of this budget? It's been a balancing act of sorts, as Mr. Das is pointing out there. But as one of India's foremost banker, how would you rate this?
Well, actually, I would say that, I don't really have a question to Mr. Das. I would just, in fact, reiterate the point that he made that, there is also a huge set of reforms there, which I would add to say that those reforms are really linked to, in some way or the other, ease of doing business or transparency and, bringing about simplification, whether it's the FIPP, the CBDT, and so on and so forth. So I think that's the one additional, strong point of the budget. So I think it actually balances the investment and growth orientation along with fiscal discipline, along with simplification and ease of doing business. So I think it ticks really all the boxes.
Thank you so much for joining us, Chanda Kochhar, MD and CEO of ICICI Bank.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.